Hello folks, welcome to Pro Trader Strategies Market Commentary for Wednesday, May the 5th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I talk about the economic data, the geopolitical environment, how those impact markets with some of my market analysis. I'm going to do the same thing in these market commentaries, but I'm also going to talk about option strategies I'm implementing into my portfolio based on those assumptions I come up with my market analysis. And for you folks, we've streamlined that process in order to find the best strategy for any given assumption. What we do is we look at the pricing, and that will determine if they're expensive or cheap. And then we decide whether or not we're going to go for a bullish assumption, a long call, or a short put. And I show you how to spot that very quickly in these webinars. So please check that out. My goal is to get you folks to a place where you understand options intuitively. And finally, if you like this, smash that like button for me. It really does help. And comments at the bottom. I'd love to go back and forth with you folks. Make sure everybody's clear of concept. All right, let's get on with the economic data. Across the pond, we got the final PMI numbers for the service sector, and this is from their original flash estimates, so we're not expecting these to be too far off, and they really did come in line there, other than Spain services PMI coming in a little bit better than originally released at 54.6, expected to be 50. That was one of those where we saw it was in negative territory throughout the entirety of this pandemic, basically, and we just got that move above 50 finally, which anything above 50 is expansion, anything below 50 is contraction with these PMI numbers. Italian services PMI, it came in lower than previously reported at 47.3, expected to be 50. So that was going to be one of those where we saw it go above 50 for the first time since basically the pandemic, and no love there. French final services PMI coming in line with expectations. German in line with expectations. In the broader European region outside those four mentioned, in line at 50. So looks pretty decent. Services a little bit lower than expected for a couple of those guys, but at the end of the day, pretty decent. I mean, I wouldn't say it was a wet blanket thrown on this market. Adp Non-Farm Payrolls. Now, this is a precursor to Friday's unemployment number. It came in at 742,000, expected to be 872,000, so lower than expected is not a good thing there. They did revise last month's number up, albeit 50,000. That's not making up for that headline miss there. We also have Evans speaking. And finally, we got our, we got our ISM, Institute for Supply Management Services PMI number. That came in at 62.7, expected to be 64.2. So a really nice high reading, not quite as high as what we got last month, but still seeing a pretty good upward trajectory from what we have seen in the past several years. So anything above 61 is very elevated for this service PMI number. All right, crude oil inventories, huge drawdown of 8 million barrels, expected to be a drawdown right around 2 million barrels. So a bigger drawdown means more demand. Now, if we look at all of how they have different buckets for crude oil, right? We got the crude oil, the raw crude coming in. They break that down into distillates, gasoline, and a few other byproducts, but for the most part, that's what we're concerned about. Distillates go into the manufacturing process. That was a drawdown of almost 3 million barrels. Gasoline, slight build of about 700,000 barrels. No production changes, so we are continuing to produce at right close to 11 million barrels a day. So we're seeing that drawdown. That means we're seeing the production happen, we're seeing it converted, and we're still seeing that demand. That is positive for crude oil. I would not be fading a new 52-week high coming in here in crude oil relatively soon. And especially, we're seeing pretty good earnings, forward guidance, all of those things are going to be bullish for crude oil. Bonds just slightly off on the day. We've got gold futures moving a little bit higher here today. Now, gold, if we're hearing some of this inflationary numbers, and yesterday was getting a little wanky, where there were people talking about some serious transitory or near-term inflation. Well, that is maybe not going to make interest rates rise real soon because we have the Fed really determining that. But gold is going to be something that is very sensitive to inflation. And if we start seeing these massive inflation numbers, gold has some serious upside potential there. And then we got Bitcoin. Bitcoin is probably going to benefit as well if we start seeing inflation, as people are going to really pound on the dollar and the weaknesses around the dollar there. But Bitcoin making a nice move to the upside by 3,000 points on the day today. VIX is coming off because, hey, it's a new day. Yesterday wasn't really a turnaround Tuesday for that matter. Maybe somebody could say it happened at the end of the day, but for the most part, we got the NASDAQ coming down and kissing that 50-day simple moving average. Now, I talked about this yesterday that I did expect us to kind of come back down to this level and kind of bounce back and forth. Now, I've talked about this just recently and at the beginning of the year that I thought that after that big run, we would see something like this where we would get new highs, kind of revert back, and ultimately really not go anywhere by the end of the year. Yes, we might be slightly higher, but I'm talking not a parabolic move like we saw last year. And I think that that's starting to shape up here as we're seeing these rotations happening. Like yesterday, big rotation out of tech and into some of the blue chips. I talked about it early, folks. Boomer stocks were probably going to start doing well for the next couple of weeks here, and I think that that's continuing to be played out here. As you can see with the Dow Jones, wasn't very weak yesterday. E-mini S&Ps up 11 on the day, coming down yesterday and testing the Fibonacci, bounced right up and away from it. That's going to be very bullish for the equities moving forward. And you can see that we got that nice big bounce right after the market commentary, so we'll have to check it out to see if we get those kind of reversals again after my market commentary. But I do expect this market to try and flush out some of those shorts that happened right off the open, because pretty much the economic data was relatively strong across the board. All right, PENN. I got back into PENN, folks, this morning. Caesars came out, gangbuster earnings, said basically bookings are doing very well. I think that the Portnoy crew is going to be the reveal at this earnings, because they've been opening up different OTBs in places, and I think that people will really enjoy their setup. So I think that this is going to be a bit of a surprise to the upside, especially after seeing Caesars. You know, Caesars was one of those that looked like they might not make it through all of this. Now they're saying their bookings are way out. It's going to be very difficult to get any rooms and stuff like that. So I think that PENN is also going to do very well. And we've got a nice little swing trade set up, this little candle yesterday at bottom. Now, I wouldn't say necessarily this is a confirmation, but you know, it's not a perfect confirmation, but confirmation nonetheless, because we are higher. We have not broken below this little wick at around 85, 82. That's going to be my out on this if it happens before the earnings there. Now, if it happens after the earnings, then I'm going to be looking to do some dollar cost averaging or something along those lines. But long PENN got in at $90.20 this morning. I put that in as soon as I saw those Caesar earnings last night. Didn't get hit off of the after hours trade, but got hit this morning on the open. And then also, what did I add? I added a little bit of what did I do? XLU, I think it was XLU. XLU, and this is based up on a swing trade here. Let's see here, XLU. As you can see here, we have really high implied volatility, confirmation. Yesterday wasn't really a confirmation from Monday's topping pattern, so I kind of waited off on it. But today, as soon as we got below yesterday's wick, I started chasing this. I started out trying to sell the 69 calls in there because we got high implied volatility. The premiums are really frothy there. Well, I've had to chase it as this market really got the carpet yanked out from underneath it as soon as I started getting into this. So I ended up having to go down to the 68 calls for 39 cents on there. I'm still happy with that strike location. You can see I'm short at 68, which is the 52-week high there. We've got tweezer tops. Add in that credit, I've got my break even is at 68.39 there. So I've got some wiggle room to the upside, confirmation to the downside, and it looks like we are going to go down here and look to revisit this 50-day simple moving average. Having said that, with this trade, I am going to be looking to get out because it's kind of below that 50-cent mark that I'm going to not go for 50% of my max profit, but I'm going to try and get out for maybe a dime or a nickel. So not 50% of max profit on this one. I'm going to look to squeeze it out maybe a little bit longer on that one. And that's all I've done so far today. Check out tomorrow's webinar. We're going to be getting into setups for maybe the next earnings we could look at it as, but basically longer duration option swing trades, and I'll show you how to set those up in that webinar, so please check that out, protraderstrategies.com. Also, if you haven't smashed that like button yet, please do that now, as it will help us out in the future. It also does help out with feedback down there in the comments box, so please reach out to us there as well. Finally, take a moment to go to our disclaimer, and if you can't smash that like button, take that. Take it easy.